Hey everybody, Boris Schlossberg from BK Forex. Welcome to our daily Forex technicals for 2/13/13. Aussie leads the way. As always, past performance not indicative of future results. Trading Forex carries higher level risk remaining unsuitable for all investors. A high degree of leverage can work against you as well as for you. Before deciding to trade any such leverage products, you should carefully consider your investment objectives, level of experience, and risk appetite. Possibility exists you could lose some or all your additional investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all risks associated with trading on margin and seek advice from an independent financial advisor if you have any doubts. Information, including commentary and trade ideas, provided on bkforex.com should not be relied upon as substitute to spend the right research. It should be informed for making your investment decisions. The information and opinions presented do not take into account any particular individual investment objectives, financial situation, or needs. All investors should obtain all advice based upon their unique situation. We're not responsible for any loss incurred on investment made by readers and clients as a result of this information. It would not render investment, legal, tax, or other professional advice. And if such advice is required, please seek advice of a competent professional. Well, the story of the day today so far on the upside is the recovery in the Aussie, and the Aussie obviously scraped the bottom yesterday at 102.50. We broke 102.50. Went all the way down to 102.25, but had a pretty strong recovery as the day ended and actually recaptured the 103 level. And I think that was one of the more important positive trades as the day ended in terms of on the up note. Overnight, Aussie confidence numbers came in much better than expected. I think like the best number in like about 11 years in terms of improvement. And as a result, we pushed all the way out to 103.50. But as we've been saying for a long time, 103.50 is a very, very serious stiff resistance level now. That got tested. We came back down. This is going to be a very interesting point of balance here because the highs here so far for the day are 103.60. If we can take out the highs for the day above the 103.50, 103.60 highs, there's a reasonable chance that we can rebuild all the way over to 104s, which is even a steeper resistance level that we're going to be facing in the rebuild of Aussie. This is kind of a really interesting comeback from a dead story on the Aussie trade. And for the time being, obviously the momentum still looks a little to be to the upside. If we can go above 103.60, it could really push us all the way to 104 as the day progresses, and that would rebuild a pretty serious bottom recovery out of the Aussie. So that's kind of the main point out of the Asia session. Yen tested 93s. Now this was another interesting trade here today. So we yesterday obviously the break was hard. We took out 94s, went all the way up to almost up to 194.50s, and the major reversal yesterday off of the change of heart on G7. That did a tremendous amount of technical damage and basically set in a short-term top. So now we have 94.50 operating as a top, and basically 93 was the bottom. Now this is the interesting thing. I wrote that we've basically been going to be operating in this 94.50, 93 range, and it seems to be that's pretty much the edges of where we're at. We tested the edge overnight. We came down below 93s into 92.80s, came right back out. However, this I think is going to be a very interesting trade here. Obviously, we have the U.S. retail sales coming up. That could be a big flip one way or the other as to how the trade goes. If we take out the lows today, if we go back to 92.80s, take out the lows, it is very probable that we unwind all the way out to 92.50s, perhaps even testing a much steeper support here at 92s. So watching this edge of the range and see how well it's trading. The recovery obviously was the short recovery probably after all the stops were run in 93s, but the story may not be over. So a break below here, the lows of the day today at 92.80s, could really open up a further distribution all the way down to 92.50s, 92s, and that would really cap a pretty high move here. Nothing to the upside here until and unless we basically take out 94.50s, because otherwise we're still operating sort of within this as a reference point for the high, and everything presses to the downside off of that. Euro on the other side looks okay. Similar sort of a story, range breakout story in the euro that's kind of holding right now. And the range breakout story in the euro was this 34.25 top, 33.50 bottom. We held the 33.50 bottom. Obviously broke out to the top yesterday, but have been very hesitant. We just cannot seem to penetrate above the 34.75 level. Now 34.75, we take those out. It's a very, very reasonable assumption to think that we can go all the way to 35s, maybe even push our way all the way out to 35.50s, which would recover most of the damage done by the Draghi testimony last week. But right now, we're basically in the upper end, above the highs of the range, still holding above the highs of the range, so the bias remains relatively positive, but need to see a push through above the 70s, 80s, really gives us a reasonable chance to make 35s, and then we'll have to see how the action trades from there. The ultimate target for the recovery is 35.50. We come back down into the range, the bias turns negative, and then again it becomes a retest of the 33.50s as the key support level here in the euro. And of course, cable is going to be the big star right now as we go forward, because within about half an hour we have the UK inflation report. Prior to the report, we see a lot of upside speculation where we've been specking all the way up, almost up to the 57. 57 now is the of course next major resistance level, but the real, I think, resistance level here is going to be the 57.50s. If we break out above 57, it's the 57.50s, and of course the really big one we failed several times is the 58s on the recovery side. Move back down takes us right back to a test of the 56s, and of course the very negative test here is if we break all the way down to yesterday's lows below the 55.70s, that takes us into the 55.50s and really a move towards the 55s. That would be a complete abnegation of any positive sentiment off of the news, and we would just completely dissolve all the way to the downside. So we're still very much at the upper end of the range here. Taking out the 57s really does give us a reasonable chance to make 57.50s. To the downside, breaking the 55.70s takes us all the way down. And that's pretty much how everything shapes up. This is Boris Schlossberg. I'm wishing you guys best of luck and the best of trading today. Over and out.